Vincent, the first one, Vincent. Welcome, Vincent. Welcome, welcome. This is a meeting between me and Vincent here today. The first one. Did you get gold buys? No. I did not get gold buys. So what I'm gonna do over here is gonna be. So we're gonna go over some comments. So we're gonna go over some comments I got on the most recent post that I had on Instagram. Let it load. Oh, security code. I don't know my security code. All right, let's do this. So the biggest question was, how did you keep on going after you lost 120,000? I think the biggest way you can look at that is to say that, okay, like, how passionate are you, right? Or like, what mistakes were you making? Because at the end of the day, we all make mistakes in trading. Whenever we're trading, we make mistakes. There's some things that we do wrong, knowingly we do wrong, and then there's some things that we unknowingly do wrong, right? So the biggest problem I had in the start was with over trading, jumping strategies, over risking a lot of times. Like most times when you would take a losing trade, you would want to avenge that loss with another trade, right? And that if that trade turns into a losing trade again, now you have two losses. And once you have two losses, you're like, okay, I don't know what to do. Should I just quit, come back the next day, or should I continue going, try to make that loss back? So I think that's one of those breaking moments where you decide that, okay, you know what, I have two losses and I'm just going to close my charts and I'm going to come back tomorrow, right? There have been some trades I took. I think day before yesterday, I had 2 losses on gold. I decided to close my charts, right? I was getting emotional about gold. I was getting emotional about the trades I was taking. And I decided to close my charts, and that was today. Came back the next day and things started to go well. So what we're going to do is we're going to start to go by questions here. Let's take a look here. Oh, there are no questions yet. Okay. All right. Must have taken a lot of self-belief as well. I think the major issue was that it was a challenge, And I think another one major thing. All right, let me just clean this up here a little bit. I can see some light reflections, but I guess it is what it is. I think the biggest issue was it wasn't self-belief. It was like a challenge, Because here's the thing: whenever you do something, or whenever you follow some sort of a pattern, or whenever you do something that has a systematic approach to something, you have to look at it in the way that, okay, I'm doing one thing. If I'm over trading, I'm getting the same result, and the result of over trading is loss after loss after loss after loss. Okay, so how can I align myself to not overtrade? Because if you do not overtrade, you're going to eventually have a different result, 100% guaranteed. I know some people are students in Market Fluidity, some people who've taken the boot camps as well. They've seen considerable changes after they've stopped over trading. Man, trust me, it's just that simple. Like guys ask me all the time, hey man, what's the secret sauce? The secret sauce is just to take 1 or 2 trades a day, focus on 1 to 2% risk. That's it. That's the secret sauce. Will you save this live so we can rewatch it later on? Yes. How much time it took you to become consistently profitable? I'd say maybe a year. What about your prop firm? I don't know, man. Prop firms are very, very profitable. Trust me. No matter what people say, it's a legit business and it's a very, very profitable business. Have I started it yet? I don't know, not yet. But I think I'm going to let some prop firms kind of test the waters. I'm going to see how we can do things differently, and how can we launch something that's going to be much better and bigger than all the other prop firms, right? Just like something we did with Dominion Markets, right? For people who don't know Dominion Markets, I'm a majority holder of Dominion Markets. We've seen a lot of brokerages come up, a lot of crypto brokerages, regulated, unregulated as well. We saw the market, we're like, okay, what's lacking in most brokerages, right? Most brokerages, the main thing is you can trade any way you want on any broker, right? The main thing is you execute a trade, you pay a commission. That commission is the fee of the brokerage. Like you pay a spread, the spread is the fee of the brokerage. Well, it goes to profit, some goes to liquidity, whatever. Then you have swap fees. Swap fees are also profit of the broker, right? And then I'm like, okay, if we're gonna launch our own platform, looking at all the brokers out there, what can we do something differently, right? The only thing that came to mind was that, okay, we can provide incentives for people. Like, let's say if someone wants to trade, they will pay commissions, obviously, right? And then there's going to be a way where people can use those commissions to get quality education with Market Fluidity, or they can use those commissions to get magic keys, right? So those are things we implemented, and Alhamdulillah, Dominion Markets has been the fastest growing crypto broker of this year, hands down. There's no reward. We didn't get any acknowledgement or whatever, but just by looking at the market, because we are in the broker market right now, and that's what I've seen, right? It's been amazing. So when it comes to prop firms, we're going to see how other people, they run their prop firms, what do they offer, and then how can we change it, because everyone follows the same business model, right? You get people come in, they pay a fee to get a funded demo account, and if they're profitable, they get the profits. The majority are not profitable. The prop firms basically keep those fees as profits for themselves, So we're going to see something, if we can change something, bring something new to the table. I think that's going to be pretty interesting. Explain gold. Explain gold. All right. Let's go right over here. Let's jump right into the charts right here. Explain gold. I haven't even looked at the charts. Oh, wow. Oh, damn. This moved really up over here. Yeah, we moved bullish. The only way I can explain gold is... let's take a look at this right here. Okay. Switch the camera. Okay. So, okay, let me just clean up the camera here. So if the power goes out, it goes out, right? All right, let's take a look at this. We should throw a bomb at prop firms. Raja Trade Memes Union will provide explosion. 100%. All right, so this is gold on the 30-minute time frame. Let's first take a look at it on the weekly time frame, right? Weekly, it was bullish. It went bullish. We rejected a major support area down here. Don't mind these arrows. Yeah, don't mind these arrows. These are just the trades I've taken over the past few weeks, as you can see right here, right? So we filled this wick right here on the higher time frame, right? Now, how could you have anticipated this New York push move, right? Because if you look at the time, this is NYSE Open is going to start in like 6 minutes. So we're going to take a look at this right here. Let's take a look on the 4-hour time frame. We moved bullish. We can see how the 4-hour candle broke above this resistance at 1787. Next candle closed bullish. Now the idea is to, hold on. Once again. All right. So the idea was, how could you have been a part of this move on gold? So that's what we're going to collectively look at this right now. So looking at the 1-hour time frame, we do see that. So this was the. All right. So it's calling me in the middle. So this was the NY Open candle. Right, NY Open candle wick down and moved up. So we're going to take a look on the 30-minute time frame. On the 30-minute time frame, before NY Open started, price was consolidating. So we're going to place a support right here. We're going to place a resistance right here. Right. So now, as we can see, there was a lot of rejections here, a lot of consolidation here. Let's zoom out here a little bit. So this is the 15-minute time frame, right? So this is around 7, 8, around pre-London. So since pre-London till NY Open, we just consolidated, right? We can see how price was rejecting up over here. We broke above this high. We rejected this area, so there was no trade. We came down to support. There was no confirmation for sells. We rejected this again, rejected this again. Now this kind of closed bullish. Let me zoom in here a little bit, because I think a lot of people took buys over here. If you guys took buys over here, say aye. I know you guys did, right? This is gold, 15-minute time frame. This candle closed bullish. There was no buys. Next candle had to break above the high, which didn't even happen, right? And then we move into NY Open. Now, this is the NY Open 15-minute candle right here. When this candle wicked down and closed bullish, we're like, okay, right? Since price is consolidating, you have to ask yourself, whenever price consolidates, you have to ask, okay, when is there going to be volume in the market? Of course, with NY Open, there's going to be volume, right? NY Open. So NY Open candle closed bullish, and now you got to ask yourself that, okay, if then this next candle breaks above these wicks for an impulse entry, what's the probability that price is going to continue pushing bullish versus what's the probability it's going to continue pushing down? That's all what you got to do. You got to measure probabilities, right? And you're like, okay, like, you know what, if we break above this wick here to the left hand side, maybe we can have an impulse entry which stops below the current candle, which would be around 23 pips. And if you look to the left hand side, we have clean range going all the way up. Oh wow, man, this was actually a very, very, very good trade. 100 pips over here, right? With a lot of volume. So that's how you got to do it. Whenever you see a move that you missed, you have to take a look at the chart and you have to ask yourself that, okay, what's the probability it's going to continue moving based on the market timing you're in, based on the volume you're looking at, based on, like, you know, a whole lot of those factors, right? And that's basically where I execute all my trades. Let's see here. You seriously changed the life. Thank you, man. I always stop trusting my own process and close my positions too early, which came out to be almost 20 to 30 pips. I wait for them, can't understand my mistake. Okay, so this is a question here, and a lot of people have this same issue, right? And this issue is that, hey man, I can take trades, right? I can take profitable trades, and I know the trade is going to go my way. And when I do take those profitable trades, you know, I close out early. Now, it's not because there's something wrong or your analysis is wrong. There's that lack of confidence at that time, right? Whenever you have lack of confidence, instead of closing the entire position, close out maybe, like, you know, 80%, close out 90%, and leave a tiny position running. Because if that tiny position is going to reach your high time frame target, then you're going to have more confidence in yourself, right? You'll say, okay, you know what? At least I was in the trade. At least I was in the trade that it went to the target I wanted it to. Can you recap this in Punjabi? Fuck out of here, man. So at least you were in that trade, right? So you're going to have confidence. And the more you do it, your confidence is going to keep on building to the point where you're going to say, okay, like, you know what? I've seen this 10 times before. Instead of closing 80%, I'm going to close 50%. Or I'm going to close 40%. And the time is going to come where you're going to say, okay, you know what? I'm going to let the whole thing running. Because I've seen it a lot of times. And there's a higher probability it's going to continue going my way. All right. Let's see here. So, how is it that people like Ted are able to take 5 to 10 trades in a day? Is that overtrading? That's not overtrading. That's a lot of experience. That's what it is. That's a lot of experience. It's like saying, hey, I want to race in Formula 1, but I can't go too fast because the car is very light, and if I turn, the car skids. Right? You've been on a go-kart, that's what happens, right? And then you're like, well, how come these Formula 1 drivers can just, like, you know, move around so easily? It's experience. You know, you start slow, 1 or 2 trades a day, you build experience, you start to build confidence as well, and trust in the time you're trading and the pair you're trading, and then slowly, like, you know, that trust, it comes into confidence. With confidence, you start taking more risk, and at the end of the day, when you take more risk, that converts into, like, you know, a bigger monetary gain. Can we sell gold now? I think you need to just close the charts, man. No need to do anything. Can you show us outside weather? Let's see here. What do we got? We have dark. It's all dark outside. There's nothing special happening outside. It's dark. It's just dark. What's your height? I'm 6'1". What's this? This is, that question was retraced. How to manage risk when trade goes not in our favor, close half when price reaches half of stop loss? No, whenever you're managing trades, you have to identify 2 things, right? So let me see if I can show you an example of a trade I cut short. I'm trying to bring up my history over here. Hold on. I'm going to show you an example of a trade where I lost less amount of money and the risk was much higher. So a great example is going to be, see if I can find it. All right, let's take a look at this trade right here. Okay. All right, let's take a look at this right here. Right, so this was a buy. This was a buy on pound yen. This was taken on the 8th October, pound yen, and this was a 25 lot, and the loss was around $1,200. Right, so we're gonna take a look at this trade right here. It was a 25 lot taken on 8th October. Let's see here. On the 8th October. 8th October. All the way down, all the way down. Okay, it was somewhere right over here. 8th October. This trade was executed at 152.356. 152.356. Yeah, right over here. This is the this is the 1 hour time frame. So I'm going to drop down to the 15-minute time frame. So let's go to the 8th October, and this was right here. So this is a 25 lot, and I managed risk. This was a buy on pound yen. Okay. All right. So you can see right here, right? Let's take a look at this right here. This is where it was executed. Look at the price. This is... yeah, I don't know if you can see it or not, but let me bring this down here. So this is how I manage my losses. So this is 152.356. The stop loss was kept at 152.250, right? So 152.250. Okay. This was the entry. This was the stop loss right here. If we measured this in pips, this was almost like a 10-11 pip stop loss, right? And we closed the trade out at 152.299. So what led to close the trade out like this? So execution was done right over here. I think this was 299, right? I think this was also on the 5-minute time frame that I managed risk because, you know, and anticipated this candle to continue bullish, but something closed at that point. This was the start. This was 15-minute time frame. Let's take a look at the 5-minute time frame now. All right, looking at the 5-minute time frame. This is why this trade was closed. Okay, so this is where the trade was executed on. Anticipated this 5-minute candle to move bullish. It closed bearish. Once it closed bearish, I was like, okay, if we're closing bearish on the 5-minute time frame, it doesn't make sense if the next one is going to go up. So instead of holding the trade, waiting for the stop loss, I decided to cut this trade short. You know, because the candle confirmations weren't there, their price is going to go up. So that's how on the 25 lot, I lost around $1,200 right here. Yeah, I did over 1.3 million here. Living in a third world country. All right. How do you know when to execute a trade, when it's breaking from an execution after a candle would close? You have to look at when are we breaking that area. Are we breaking when there's volume? And you know what's going on. When you lost 120, which is your entire saving, how did you confidence in trading again? It's very simple. I looked at my mistakes. Here's the thing. Most people don't look at their mistakes. I looked at my mistakes and I asked myself that, okay, what were the consistent mistakes I made when I lost that amount, right? The key word is consistent mistakes. If you don't look at your consistent mistakes, it's never going to work, right? So consistent mistakes was over trading and over risking. That's it. You remove these two from the equation, you're going to stop blowing accounts. You're going to stop getting anxiety attacks. Your heartbeat is going to slow down, because I know some guys, when they execute trades, their heart starts beating pretty fast, right? Your heartbeat is going to start beating slowly, right? You're going to have less anxiety. You're going to be less anxious, and overall, you're going to have more confidence, because now you're not losing as much money. How is home? Beautiful. I need to work on my short losses. I usually try to close early, but most of them I feel like to the runs TP. My mistake, I cannot close my losses shorts. You have to close all shorts. You have to have enough control over yourself to close losses shorts. Because I know in my mind, okay, here's my motto. Here's my motto, right? Here's my motto, okay. Here's my motto. If I'm going to take a trade, right, I'm going to have a specific monetary risk in my mind. And my whole goal is to close the trade in profits, obviously, right? That's what we plan out to do. But at the same time, if it goes against me, my whole goal is to lose less than planned, right? If you're planning on let's say like a 10 pip loss on a 25 lot, is going to be like $2,400. Make sure you lose less than what you plan on losing, because at the end of the day, I mean, you can't control your winners, but you definitely can control your losses. So you got to stop worrying about, oh man, the trade's going to go against me. I can't close now. Some people get hypnotized by a loss. Sometimes you guys, man, your losses get so big, you get hypnotized that you can't close. And I used to be like that. I would get hypnotized by my losses so much, I would just wouldn't close. I just look at it going in negative and negative and negative, and I had to snap out of it. Do you think I should go into funded account after being profitable for 3 months? Yes. It's going to work very, very well. Funded accounts after that. All right. How long did you spend for taking profit? 30 minutes, probably 15 minutes normally. That's how long the trade takes. Let me fix this. All right. How do I get over thinking that changing that big win every time just had to blow account? What? How do I get over thinking that changing that big win can blow the account? You can't get big wins every day. Contrary to popular belief, you can't get big wins. To get big wins, you need to have perfect entries and perfect exits every day. You can get big wins maybe once a week, maybe once in 2 weeks. You can get amazing wins. I mean, I know I had a 100 pip win maybe a week ago. After that, haven't seen a 100 pip win, maybe 30, 40 pips at that time. But 100 pip win, you can get maybe once a week, but there needs to be a lot of volume. Just like on gold we had this morning with the NY Open, a lot of volume there. We moved around 120 pips on gold, $12 move. Could you please explain different session, when start, when end? My man, you can just Google that. Google when sessions start. It's man, I think you guys have lost the ability to research. It's a stupid question sometimes. All right, let's take a look at this over here. I backtest my system and it seems to work, but when I start trading the system, it works sometime, and after that, if losses happen, I usually try to fix the system and end up changing system all again. Still profitable. This is a big thing. When you start a system, just stick to that system. A system will never be 100% profitable. Never, ever. Man, there are some trades I take that I would take over and over and over and over again till the cows come home. And do I expect that same setup to work all the time? Not at all. Sometimes that setup doesn't work, and it happens on the live streams. 3 days ago, I took 2 losses on gold back to back, and that was trying to trade the same setup I've traded before. It has a high probability of winning, and it didn't work. And what did I do after that? I stopped trading for the day. How do you control emotions? Just focus on 1 or 2 trades a day. Can you show gold buy today? Gold buy today, I did not take any gold buy. Did not take any gold buy. I actually didn't take any trade today. What's your biggest challenge in trading and how do you overcome it? My biggest challenge in trading was to close my losses. That was the biggest challenge. That's a huge mental and emotional hurdle people go through all the time, to decide, to basically get over the fact that, okay, if I'm in a losing trade, am I moving my stop losses? Am I removing my stop losses, right? Those are things you really, really need to keep in mind, like, are you removing your stops? Are you moving your stops? Because although these two things are going to keep you in drawdown. How to handle psychology? 1 or 2 trades today. Who do you recommend? What's this? What do you recommend to a trader that is in a break-even level? If you're in a break-even level, you need to take a look at your losses and you need to see how could you have made your losses small. For example, now I've shown this over and over again, and I'm just going to show this here once more time. So let's take a look at this over here. All right, let's see. So here are a bunch of losses I had. Over here too. Let's take a look at these losses. So this was CPI news right here. Yeah, this was CPI where both my sell stop got activated here, and then my buy stop got activated right over here. So you can see this was a 50 lot, and let's take a look at the date. This was the 14th September, right? 14th September had a $30,000 loss, 33, and then lost this one here as well. This was 8,000. And what did I do after this, right? 14th, I think this was a Tuesday. I took the 15th off, and then I came back the next day. I took the next day off. I came back the day after that on the 16th, took a sell on gold, took another sell on gold. These are 2 wins, almost like 100,000 were there. And then, look, then this was on the 17th. Weekend came 21, 23, 24, then 28, 29, 30, 4. So you can see the dates. You can see how the dates change. Right, this is, I don't know what happened here. Okay, yeah, these are smaller lots over here. These were when I used dynamic risk. These are all dynamic risk, 10, 20 pip moves. You can see right here on 10 lots, right? Smaller pip moves. So didn't really, and then these were like 0.01 lots right here. You can see right here, 0.01, and then increase the lot size here again. So sometimes you really got to step back, sometimes you really got to step back and then realign yourself, Sometimes if you do have losses, make sure you're losing less than what you're planning on losing, because that's the only thing that's going to keep you in the game. What's your staying positive routine? My family and kids and the haters. I know the haters are right here. I know you guys are watching me right now. I know you're watching me. You watching closely, they're like, oh, hey, this Raja guy. This Raja guy. Nah, it's okay. Do you still execute during lending sessions? Sometimes, sometimes when I see there's enough range, there's enough room for price to move into, is there potential for price to move in, let's say, a 4-hour range? Can we have this continuation move moving into the NY session, especially with gold or pound yen? Absolutely, I try to take some trades based on the lending session. Okay, so let's see here. Please, what site do you recommend for backtesting? There's no website for backtesting. Just look at the charts. Backtest by looking at your trades. You're looking fresh like the Prince of Bel-Air? Yes, Prince of Pakistan over here. Okay, let's see here. Can Indians watch you on Instagram? No, Indians are banned from Instagram. What's your strategy for gold? There's no strategy. Just look at the charts. Look at the price. See how things move. See when price moves and stuff like that. Let's see here. Does Magic Key work for IC markets? Yes. Why my stop loss is always executed at the tip and then price reversing so bad? Now, why does my stop loss gets activated at the wick and then price goes in my favor? this happens to a lot of people, right? This used to happen to me as well, and it still happens where it activates my stop and then price goes in my favor. At that point, you have to look at the price and you have to ask yourself that, okay, how could I have given my trade a second chance, right? What could I have done differently to give my trade a second chance? And I have a perfect example for that right over here. This was on pound yen on Thursday when I was looking for sells. And let me show you guys right here. And I specifically remember this. And the reason why I specifically remember this is because I don't overtrade, and I meticulously go over my trades to see where I had problems, how I could have done things differently, you know, so on and so forth. So I'm going to show you guys a great example of how I gave my trade a second chance, and it eventually was a winning trade. So I'm going to first show you the daily time frame, and then we're going to go over that together. So actually I'm going to show you the weekly time frame, and then we're going to go over that together, right? So all right, so let's take a look at this right here. Now, first things first, right? What was the result? Let's take a look at this one here, right? You can see this one here, $2,900 loss. This was a sell on pound yen, right? Pound yen sell. It was a 50 lot. It was a $2,900 loss right here. And then there was a profitable trade. This was a win. This was a sell on pound yen, and this was also a 50 lot right here. So I lost one trade in a sell, and then I gave my trade a second chance. And you can look at the time difference here as well, right? This trade was taken at 12:22, 12:13, you know, somewhere around there. And then the next one was taken almost like 30 minutes apart. So we're going to take a look at this right here. So this is the weekly time frame right here. So we're going to take a look at the weekly here first. Let's remove all these lines here. So we're going to remove all these lines here first. I know there's an easier way to do it, but I'm old school. Okay, so this is the weekly chart on pound yen. You can see how many trades I've taken on this account right here, right? So weekly is right here. Looking to the left-hand side, the last time weekly was at this area, 156 on pound yen, was in 2016, right? When the last time pound yen was at this area was in 2016, so this becomes an automatic heavy rejection area. Next, went on through daily time frame. So let's take a look at the daily right here. Let's zoom in here a little bit. All right. So the whole idea was that if the Wednesday daily candle closed like this, a small bullish candle, right, which means the upward volume is dying, what's the probability that the next daily candle can be bearish coming down towards, 156, 800, 700, down to the support? And the whole idea was, well, if the weekly is rejecting, then the daily should also come down. But now we needed confirmations on the smaller time frames. So moved on to the smaller time frame, 4-hour time frame, and this is what I found. So this is the 4-hour time frame. Let me clean this mirror right over here in a circular motion, so you guys can see things much more clearly. All right, perfect. Right, so the 4-hour candle closed bullish, weak bullish candle, which means there's less bullish volume on the 4-hour. Next one was coming down. Obviously, we needed confirmations on the small time frames. Next, move on to the 1-hour time frame. 1-hour time frame provided nothing except for the fact that we had some sort of a resistance right here. You can see this is where the trade was taken, and next candle moved down over here. Let's take a look on the 30-minute time frame now. I also talked about this in my live as well. All right, so this is the 30-minute time frame right here. All right, let's look at this right here together. Okay, so let's look at how price action developed here, right? So we had a bearish candle form, and then we had, this is the 30-minute time frame on pound yen. Then we had bearish, bearish, bullish, bearish. What does this mean? Bullish, bearish means resistance. So we have a resistance formed right around here. Let me just draw a zone, which is going to be much more easier to understand. So this was sort of like, what the hell? Can't draw a zone. Anyway, this was the zone right over here, right? This whole area was a resistance, right? So resistance formed, price came down, formed support. The support was a wick from the left-hand side. We formed support. Next candle moved bullish. And when this candle closed bullish, I was thinking that, okay, if this next candle can break above the high, then I can take a buy and then we can move up since we have clean candle through the left-hand side. That didn't happen, right? What happened was that this candle was about to close back in the range and I took a sell. I took a sell. You can see right here, sell was executed right here. And the sell was executed based on the fact that, okay, what's the probability that the next candle can wick up and then continue on pushing down, since this move up becomes a fake out, and the high time frame is also pushing down because we're at a very, very strong area, right? So this was the first position I opened. It went in a little bit of a drawdown, and I was like, okay, you know what? I'm gonna wait for a better confirmation. And this was the loss right here on a 50 lot, closed about minus 6 pips, whatever. I'm like, okay, perfect. I'm gonna wait. Right now, then I jumped onto the 15-minute time frame. 15-minute time frame right here. Okay. Now, then when the next 15-minute candle, it broke the low of the previous bullish candle, this told me that, okay, if the 30-minute candles go down, maybe this move up was a liquidity grab on the 30-minute time frame. Now, if the 15-minute is breaking the low of the previous bullish candle, I think this is a very, very good entry for a sell, and maybe I can hold it for the higher time frame to continue down. So I gave my trade a second chance right over here, and this second chance paid off with a $13,900 reward. Well, minus commission, whatever it was on a 50 lot, $350. So 3,600, something like that. So whenever you're missing on a trade, go over that trade and ask yourself, how could you have given your trade a second chance? It works all the time, because these things you're going to see over and over again. And the more you can look at how you could have given your trade a second chance, less anxious you're going to be for the next time, because sometimes we miss moves, and always look at the charts, man. That's how you learn. Come on. Okay. How to remove fear? Can we place a position? Let's see here. We're gonna answer one more question, and then we're gonna call it a day. All right. Yeah, I'm getting some calls over here. Okay, guys, I'm gonna end this right here. So we're probably gonna meet again somewhere on Sunday or something like that. So take care. Have fun. Have a great weekend.